So here's the issue with Rivian. It's either going to work like Tesla did, or it's not. It seems very binary. UBS comes out, says buy today, price target 24, basically say that they're probably not going to have to do this again for at least a year. But I mean, I don't know that that's a positive. I guess it's not a negative. So that's one thing. The stock's been beaten down a ton. Obviously, the key distinction, though, that I think the problem is everyone wants to find the next Tesla, right? Because Tesla was a superstar investment.
And they hope it's not the next DeLorean.
The problem is Tesla did this when money was cheap.
Yes.
They also didn't have any. They didn't have another big firm that was doing the exact same thing already successfully. They sort of pioneered this space. But I don't think we can discount the fact that how much cheaper money was and how much more willing investors were to pay up for growth and the story that you were selling as opposed to the dollars and cents of the reality of your business. And the reality of Rivian right now is not a good one.
No, it certainly is not. The situation is actually becoming quite dire at Rivian. And our friend AJ, he's a former investment banker at Goldman Sachs and a Tesla investor, says it's hard to convey the scale of Rivian's cash burning. This provides a visual comparison between Tesla and Rivian's production and free cash flow development. Rivian's shown free cash flow includes my forecast until the first quarter of 2024. His chart reads, although Rivian's production ramp compares with Tesla's, Rivian's cash burn rate significantly surpasses that of Tesla, indicating a substantial disparity in their financial management despite similar production levels. It shows Tesla and Rivian cumulative production and cumulative free cash flow from the start of their EV sales. This is Tesla in the third quarter of 2012 and Rivian in the third quarter of 2021. So as we can see, Rivian production is actually on pace with Tesla's production around their similar infancy. But this line here is Tesla's free cash flow from 2012 until now. And this line here is Rivian's free cash flow from 2021 until now. So as you can see, in terms of money management and in terms of your cost of manufacturing, Tesla performing much better in that 2012-2013 range than Rivian is in that 2021-2022 range. And now you have Rivian asking for more money at a time when money is extremely expensive and Cybertruck is about to come out and compete with their existing lineup. So yes, Rivian's reality right now is not a good one.
It says they lose $32,000 every car that they sell. Well, that's a scary statistic, but all it means is they need to ramp up production to get to profitability, correct?
But you're right. You can't deny the fundamentals. They lose almost $1 billion every quarter. Depending upon who you ask, they're losing somewhere between 30,000, as you said, to upwards of 100,000 per vehicle. Now, interestingly enough, if you look at a company like Lucid, they're losing something like $300,000 per vehicle. So from that relative basis, it's pretty good, but it certainly doesn't line up well with somebody like Tesla. As Alex said, financing used to be very cheap. It's not any longer. These guys aren't leaders. They are innovative in the sense that they went to the truck market first, but I think it was probably because they probably figured they couldn't compete directly with the Tesla automobiles.
That was probably the right choice for Rivian, but let's take a deeper dive into their forecast over the next couple of quarters and see if they can survive. AJ says he estimates Rivian's third quarter, fourth quarter, and first quarter 2024 losses to go from $1 billion to about $700 billion in losses. Rivian will likely raise more capital in the first half of 2024, he says. He also assumes average quarterly vehicle cost of goods sold reduction to go from negative 15% all the way down to minus 9%. So he's assuming that they continue to drive costs down. He assumes average selling prices to remain at the same levels they are today at $88,000. This is also conservative assumptions. This would imply modest gross profitability in the first quarter of 2024. Despite that, Rivian's free cash flow generation will likely stay above $1 billion in the negative, primarily driven by continued operating losses and likely further working capital expansion. Working capital appears to be the lowest hanging fruit to improve Rivian's cash burn rate since capital expenditures appear at a low rate already. I have included yesterday's announced $1.5 billion debt issuance. This implies Rivian's cash balance as of quarter end will likely change from $8 billion to $7 billion by March 2024. This is predicated on Rivian realizing the above-mentioned savings. This is paramount and will be the number to watch out for in the upcoming third quarter report. Absent a very prosperous first half, I believe Rivian's next capital raise will be announced in the first half of 2024. So even after the generous assumptions that AJ gave Rivian, assuming they will be able to drive costs down significantly, he still predicts they'll lose $700 million in cash flow in the first quarter of 2024. And if we look at Rivian's stock price today, they're in a dire situation, and it reminds me of the 2018 ramp of the Model 3, where Tesla still was not profitable. And Tesla at that time was trading at $40 billion. Well, now Rivian is here in a dire situation, and they're trading at $18 billion. But let's say that Rivian survives and they start making profitable vehicles. I don't think that the market is going to give them the same story, the same upside that Tesla received, because we were heading into a very growth favorable environment given the government stimulus at the time, and also that Tesla were pioneers in the space. So I'm not sure that the risk that you're taking in buying Rivian stock right now warrants the same upside that Tesla got in the first place.
Ramping up production, borrowing money to ramp up production to get to decrease that loss per vehicle that they have. And remember, they've got Amazon money. It's not like they don't have cash. They went from 10.2 billion in cash to 9.1 billion in cash. So they've got plenty of money. I think they're just trying to race and uptick their production to get more profitable. Randy, interesting enough, they're made in downstate Illinois. And so you see a spattering of them around suburban Illinois. You're right, they are impressive looking SUVs.
That's great, but it doesn't matter how awesome your products are if they're expensive to manufacture. Here's a Rivian next to a Cybertruck. One is designed to blow people away by the fact that it looks kind of like a small Hummer, and the other one is designed to be mass manufactured. I'll let you figure out which one is which. Here's an article from Motor Trend that touches on some of the inefficiencies of Rivian's manufacturing. According to a WSJ report, analysts have called out Rivian's engineering practices for making vehicle production too costly. Rivian wants to make sure the R1T performed better in crash tests than other vehicles in its class. However, that meant adding more metal, which increases costs and weight. The report also cites current and former employees that say that Rivian's skateboard chassis is complicated to assemble, and some areas of the chassis need to be welded twice, once by a robot and again by hand. If Tesla can make the safest cars on the road without having to add more metal, then there could be something fundamentally wrong with the design of the Rivian, and if it is the case that they need to redesign and even retool their factories, well, that would just be a devastating setback for the company.
Yeah, again, they are very impressive, and they do have some deep pockets behind them without a doubt, but not every company that starts out in that situation can sustain that for the long run. As Alex said, Tesla had a major advantage in that they actually created this segment. I mean, unless you think the Nissan Leaf was a competitor, I don't. Tesla kind of created this space. Rivian's coming in late to the game. They've come in when the money's a little bit more expensive and difficult to come by. But again, they have put together a very, very impressive product. But there are challenges as well. I mean, I've read a number of articles where if you park the truck for 3 or 4 days, it'll lose like 5 or 6 or 7% of its battery just sitting there. To me, that's kind of like a car leaking gasoline on the ground. We wouldn't tolerate that. So I think there are still some little glitches and things that need to be worked out.
Yeah, okay. I think losing a couple percent of battery storage over a few days is the least of Rivian's worries right now. Rivian CEO RJ Scaringe needs to be living on the assembly line right now, trying to find ways to drive costs down, or Rivian is not going to survive. Again, AJ was generous, assuming that they get their costs down to $83,000 per vehicle in the fourth quarter, but they would still lose $700 million even with that assumption. Rivian just raised $1.5 billion. Now they're going to have to raise even more money in the first half of 2024. Their debt pile continues to grow larger while they try to drive costs down on a design vehicle that might have just been doomed from the start. Good day, everyone.